Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 31st, 2022. Hope you're all doing well. In today's segment, we'll take a look at gold fields, ticker symbol GFI. They announced proposed acquisition of Yamaha Gold, and gold field stock came tumbling down big time. Let's see if it's worth buying up here. So with that, let's jump in and get started. We'll start with knowing a little bit about Goldfield and their background, and let's look at competitive landscape, where we look at top gold stocks, and then let's look at numbers in GFI, and finally let's do some technical analysis and go with the verdict. Is it buy or sell at this time? All right, now let's jump in. Look, from a leadership perspective, we got Mr. Chris Griffith. He's the CEO of Goldfields, and he's got a good approval rating. Look, it's 93% approval rating, not bad at all. And looks like we got old CEO here, not Nick Holland, but new CEO is Chris Griffith. And look, he's got a CFO, Paul Schmidt, and looks like these guys are doing pretty well. And as you look through here, CEO Chris Griffith, she had been with Goldfields since April 2021, but look, he's got relevant experience. He was CEO of Anglo American Platinum, and then he was with the Iron Ore Company and various other companies. Looks like he's got relevant experience in the mining business. All right, so CEO checks out. Looks like he's doing a good job. And as you look through here, we got Goldfields, and Goldfields is buying or acquiring Yamaha Gold. As you look through Goldfield here, their vision is good here. They want to be preferred gold mining company. That's a good vision, as you can see here. And they want to be sustainable. That's also great, and superior value. And as you can see here, why we exist, creating enduring value beyond mining. I think overall the vision statement sounds pretty good here, and let's dive in a little more deeper. All right, look, with the acquisition of Yamaha Gold, looks like there is a good synergy here. The Goldfields has got a nice metric of gold here, and then you got Yamaha supplementing this business big time here. So overall looks like they got nice AISC. It's pretty good here. So looks like both companies are contributing each other, complementing each other pretty well. And I think as in the gold business, especially in the mining business, if you want to survive, you got to have at least a $10 billion market cap. Otherwise, it's very hard because you don't have too much scale here. That's one of the reasons in the gold area, folks are really acquiring and merging to become bigger. All right, now let's jump in and look at the details. Look, as you see here, there is some good synergy here, and Yamaha looks like it's a $6.7 billion. And as you look through here, the combined merger can be about $15 billion or so. Look, we got $5 billion here, we got $10 billion here. It's about $15-16 billion. That's a good scale for companies like this one to operate, and they will become either fourth or fifth biggest gold miner. That's a good position to be in. And also looks like they're going to avoid some of these significant costs. There's also a good one here, good synergy here. All right, now let's jump in and look at Goldfields. Look, from a Goldfield perspective, it's a good gold producer. They got reserves in Chile, South Africa, Ghana, West Africa, and so on and so forth. This is where the complementary nature of the acquisition will come in. And look, this company has got the market cap about $8 billion, and price is about $9. And look, it's been down year to date 15%, and it's been down from 52-week high about 45% after the acquisition. Look at this whole big downturn here, down 26%. Look at the drop after they announced the acquisition. So all these things are happening because there is a perceived notion that Goldfield paid too much premium to acquire Yamaha Gold. So that's why stock came tumbling down here. And look, it's Goldfield is paying $7 billion for the Canadian miner, and folks don't like paying too much premium. In the past, there were a couple of gold deals where 0% premium was paid, but in this case, GFI or Goldfields is paying a good amount of premium. That's why stock came tumbling down. And look, from an analyst perspective, we still have nice moderate buy here. That's a good one here. And also, these type of acquisitions will create some share dilution. That's another reason stock came down. All right, now let's jump in here and look at the price target. From a price target perspective, look, the high target is 16, low target is 14. Stock is at 9.34 right now. This stock can go higher. It's a well-run company. From a technical perspective, it's a strong sell right now, as you can see here. From a fundamental perspective, it's neutral. So I think it's a good one to buy after this huge big drop here. This company can bounce back pretty nicely from these levels. All right, now let's look at the competitive landscape. From a competitive landscape perspective, look at this combination between GFI and Yamaha. It can really create long-term value. I think that's a good deal here. And companies have to be a little more bigger in size for them to get the good scale. All right, now let's jump in here. Look, from a competitive landscape perspective, this chart is sorted by market capitalization. Look, on the top we got Newmont Gold with the highest market capitalization of $53 billion. And even up here, Newmont is doing very well. Look, they're growing nicely. 5% growth in the sales, which is top line revenue. Nice net margin positive here. And PE ratio is slightly high, as you can see here. But they're doing very well. Look at that 5-year performance. Pretty good here. Overall score is also good. And next is Barrick Gold here. It's one of the good companies. But look, Barrick Gold does not have a top line sales growth yet. It's negative. But they're doing very good from a net margin perspective and tightening their belt when it comes to cost. And this stock has not done very well in the past 5 years, as you can see here. Literally lower overall score. And then you got a few more here. You got FNV here. This has done great. Look, this is doing very well, and nice top line sales growth and nice net margin also, and overall pretty good overall score here. And look, they've done very good in the past 5 years. And we got a few more, as you can see here. I also like WPM and SBSW. Both are doing well. Look at their performance, especially SBSW. Look at that overall score here, 92. And look at the overall performance. It's also great. And stock is down, as you can see here, with the low RSI. You could buy this company at this bargain price. Even WPM, look at that RSI. That tells you stock is down big time. And now finally we got our company here, GFI. Look at GFI here. Great company. Look at the net margin, 19%. Great. Top line growth, it's at 8% growth here. That's also great here. Look at the performance, 5-year performance, great performance. Overall score is also great. Stock is sold off. Look at that RSI here, 27, tells the stock is completely sold off here. I think it's a great buy at these levels. It came down big time because Wall Street pursued that these folks paid too much premium. That's why stock came down. Also dilution worries, which is as usual. And then we got a few more, as you can see here. Look, we got the AUY, Yamaha Gold. This company is being acquired by GFI. Look, they also have a nice performance. Look at that performance here. And they're also growing nicely from a top line growth perspective. And they also have a nice net margin. So that's why, it's a good one here. We got $5 billion right here in Yamaha. And we got here about $9 billion. So that's about $14-15 billion. It will put this combined company right behind WPM here. It will become maybe number 5 biggest company in this gold market. That's a good position to be in. All right, now let's look at a few more here. We got, before we go there, let's look at the industry rating here. From an industry rating perspective, we just brought in Pietroski F score and a few more ratings, as you can see here. And look, from a rating perspective, we got here GFI, nice number 6 when it comes to Pietroski F score here. And look, we got AUY, again number 6, which is good. Both are doing pretty well here. And as you scan through here from a growth perspective, number 66 growth rank versus peers when it comes to GFI, and AUY is 35. Looks like GFI is growing much faster than AUY. On the other hand, when it comes to valuation, looks like right now, after this big huge run up here, Yamaha went much higher from a valuation perspective. So as you scan through here, we got financial strength here. Looks like Yamaha is doing very well, 92 when it comes to financial strength, whereas GFI is again doing great. Look at that overall score here, 95. So I think it's also doing very well when it compared to the industry. If you want nice growth leaders, keep watching here. You want nice growth leaders, we got few companies here, including we got right here WPM, or actually SBSW. That has got a nice nice growth here. So you could buy this great company here at the nice clip here. All right, let's look at SBSW right there. All right, let's look at a few more here and go from there. Look, we got a few more companies here. Keep watching the overall sales and net margin. We got here Sand. Looks Sand is doing pretty well here. Nice growth. Look at that net margin here. They have nice 27% net margin, and looks like they're doing pretty okay in last 5 years. And then you got one more here, EQX here. Look, it's got nice 45% net margin here, and they also have a nice overall score. You could buy this one also. And finally, we got DRD here. It also has a nice net margin here, and it's done very well in past 5 years. Nice overall score. You could buy this one too. All right, now let's jump in here and look at Goldfields. Look, Goldfield from a number perspective, RSI is clobbered right now, very low. Stock price is 9.34, not too bad. Look, they're doing $1.6 million revenue per employee. That's a great number here. Analysts recommend buy, and stock has been down big time in 1 day, 5 day, all the way to 1 year. I think it's a big time down here, but it's a good time to buy. And as you scan through here, top line sales number is pretty good here. They're growing the sales in past 5 years and 1 year, and next year sales growth is I think right now they don't have any. Next year EPS growth is positive. That's a great one here. You got EPS growth. I think they have not shown anything so far. That's okay. So as you look through here from a net margin perspective, nice net margin, 19%. That's a great one here. And look, institutions are selling slightly, which is not too bad. It's not too bad number here. All right, so as you look through your technical rating perspective, it's a sell, and look, it's got nice Pietroski F score, and it's got nice grade from Morningstar when it comes to growth and profitability. Not too bad at all. So with that, overall score is 76, which is pretty healthy. So I think I feel good about this company, and they've been doing pretty well in the past, but now stock has come down so much. It's good to buy some Goldfields here. They can bounce back nicely and even become stronger after the acquisition of Yamaha Gold. All right, let's jump in and look at the numbers here. GFI, Goldfields, look, earnings per share perspective, doing nicely. I like it. They're doing well. And top line sales is also growing nicely. Shares outstanding, slight dilution, but not too much. It actually came down slightly, which is good. Operating margin trending in the right direction, going higher. Net margin is also going higher. That's great here. And debt to equity is pretty, it's coming down off late, which is always good. So overall, from a numbers perspective, this company is doing well. They're growing their earnings, growing their sales, and growing their margins and bringing down the debt. They're doing all the good things here. It's very fiscally responsible company. All right, now let's look at a quarterly number. From a quarterly number perspective, look, it's doing pretty okay here. We got nice uptick here, and net income perspective also slightly increase here. Not too bad. I think they're doing well on a quarterly basis also. All right, now let's look at the seasonality here. So if you're a swing type trader here, look, typically June and July are good for this company here. Right now it came down significantly. I think it can go higher in June and July, according to the previous historical return. And they also did well in December and January. So don't worry too much at this time. Given it's down big time, you can expect some bounce back as you go forward in June and July. After that, if you want to take some profit, you can. Otherwise, you can hold this company. They will do well. They've done well in past 5-year time frame. All right, now let's look at the technicals here. From a technical perspective, look at this chart. This company has dropped off so much here so quickly. That's one of the reasons I'm buying the company. And also look, stock has, company is doing very well as we looked at from a numbers perspective or fundamental perspective, company doing very well. All right, now let's look at just an 18-month chart here. In the 18-month chart, look, stock is down big time here, and volume is increasing, as you can see here. On the balance, volume came down slightly, but look, chart itself is not great, as you can see here. This happens when the stock comes down drastically like it did here. The chart looks ugly. We don't need to look at the chart at this time, but as a contrarian, you could pick up some of the gold field here at a bargain basement price around, say, $9.34. It can bounce back nicely from these levels. All right, now let's look at the options chain. So in the option market, look, stock price is at $9, as you can see here, and all-time high or 52-week high is $17. And there is a good bounce from the current levels. That's a good one here. And stock price is $9 here. At $9, look, there's a nice open interest here, around 64. But look, we got nice open interest here around, let's see here, $17. Look at that open interest, 5,000 contracts. And even at $22, look at that open interest here, nice and high open interest. So in the options market, folks are betting the stock will go higher. And there is also some open interest when it comes to put options, but it's nowhere close to open interest on the call side. All right, so with that, let's look at the put-call ratio. Look, from a put-call ratio perspective, it's 0.72. More call options traded than put options traded. So at this time, I think it's a good time to buy the stock outright. Given stock price is so low, I would buy stock outright versus trading options. Mainly because look, from a from a IV percentile perspective, it is a little high, 67. When the IV percentile is that high, I would not be trading options. Instead, because stock price is so low, I would be buying the stock outright. All right, so with that, let's do a quick conclusion here. Look, we got South Africa's gold fields. It's buying Canada's Yamana gold. It will create the world's 4th largest miner. So with the Yamana, gold fields will add projects in Canada, Brazil, Argentina, Chile to its portfolio. Nice diversification here. I think that's a good one here. And this transaction will create top 4 global gold major. That's very much required in this business here. You got to be big, and you got to have a nice scale here. This acquisition will bring the scale and size to gold field. And when the deal is approved, Goldfield shareholders will receive 61% of combined 15.6% company. That's a good good one here. This will also create some dilution, which is which always comes up with these acquisitions. So with that, looks like the reason stock came down is in the investors and Wall Street pursued the GFI paid too much money. That's why stock came tumbling down here. And according to Rene, it's a good deal, and I think they think this deal will make this company more valuable. That's a good one here. So I think that's a good statement here. Given in the gold business, you got to be a little more bigger. You can't be a very small player, otherwise you'll not have any scale. So with that, I think stock is oversold here. I recommend buying GFI. This stock can bounce back nicely as there is a lot of geopolitical tensions. Gold can go higher in the longer term. It's also a good hedging play here. People come to the safe haven of gold. I think it's a good one to buy at these levels. So with that, thank you very much. Happy investing and trading. Please subscribe.